Hello, 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 hello. Welcome, everyone. We're going to go ahead and get started. I was trying to let the room fill up just a little bit, but we're going to go ahead and get started. I want to apologize beforehand. I am a little nasally, allergies and sinuses. Anyone suffering from allergies right now? Yeah, me too. So you feel my pain. Okay. Before I even get into the introduction, I want to thank you all for coming out and actually signing up for the session and attending the session with us. It's going to be a great session for you to understand some of PHFA's products and some of our down payment closing cost assistance programs that we offer. My name is Brooke Proctor, and I'm a business development officer at the Pennsylvania Housing Finance Agency. And my job is to work hand in hand with the lender. Okay, so I work with the lender through PHFA's in-house processes. So I help them with loan originating, underwriting, processing, closing, post-closing, any scenarios, questions you may have. You will contact me as your account advisor, and I would help you through that process. Okay, I'm also not in charge, but Justin, myself, and my colleague Michelle on getting new lenders on board. Okay, so we want more mortgage companies, more banks, the more the merrier here at PHFA. This is Justin Eden. He will be assisting me with the presentation today. And then we have our wonderful new colleague, Michelle Farron, and she is passing out tickets. Has everyone received a ticket? So we're going to have fun in this room today. We're not going to be boring. So the ticket is we're going to play Jeopardy. Everyone loves a good Jeopardy game, right? We're going to play Jeopardy at the end of the presentation, just to test your PHFA knowledge and just to see if you were sleeping with your eyes open, to make sure that you guys are getting the gist of what we are going to discuss today. You should all have received a blue folder. Everyone has a blue folder, correct? Okay, so Justin is going to go through that blue folder, and you have some reference sheets and some guides that you can reference throughout the presentation today. And then you have the PowerPoint itself. So if you would like to take notes, you can take notes on the PowerPoint, or if you have questions, you can jot your questions down. And just to let you know, this session is being recorded. So if you have a question, I'm going to pass you the mic so it can be heard on the video, and then pass it back to me for the answer. Okay, is that good to go?
All right, great. My name is Justin Eden from Pennsylvania Housing Finance Agency. I assume you can hear me because I saw you looked up like, whoa, that was loud. Great. So I'm going to go through this packet. You should all have a blue folder. If you do not, please raise your hand. All right, great. Nobody wants to raise their hand because you don't want to be on video. I get it. So when you open this blue packet, on the left side, there is your PowerPoint presentation that we'll actually go through today. That's the first thing. Also, we have our customer solutions card at the bottom. So if you or anyone you know, you ever had any questions on any of the mortgage products we offer, how to get started, you can call that number, and we have a solution center that is great that would help them out. When you go over to the right side of your package, just so you know, there's some marketing material and a few things here. We have these brochures available in English and Spanish. So we provided them to you in your packet, and for marketing purposes, I can give you a request form, and you can request these to actually hand out. So we have our programs for home buyers. We also have our Why Should I Choose a PHFA Mortgage? And this is nice because it highlights all of PHFA's features. A lot of the things we talk about and we're marketing today and really just going through are, to make home buying more affordable. Some of those things we capture on this list. Another thing we have in here is what's called a mortgage credit certificate program. Has anyone ever heard of this mortgage credit certificate? Okay, we have a few head nods. Does anyone really understand how this works? Okay. And again, we do have another presentation where we really go over this. This isn't in this presentation because we just wanted to kind of keep it short and sweet for everyone as a generalization and not get into too much detail. But this is it's an amazing program, really an amazing program for a home buyer. It allows a home buyer to claim some interest that they pay at the end of the year, up to $2,000. So what happens is the mortgage interest the borrower pays, right, they get to recoup some of that money back, up to $2,000. And again, we know how much the borrower pays over the life of the loan, right? Over the 30-year term, it's a lot of interest. So to be able to recoup some of that money is just a great benefit. The last brochure we have here is our AEH program, our Employer Assisted Housing Program. I'm not going to spend too much time on this because I'm actually go through this in a presentation. But again, all good brochures for your reference. I'm going to turn it back over to Brooke, and she will get started with the presentation.
All right. So any questions for Justin or myself about what we do, the information that you received in your package? You're pretty good. We're going to engage in this session here, okay? We're going to have fun. So we're going to jump right into the PowerPoint, make home buying more affordable with PHFA financing. And if you can't hear me, let me know. You should be able to if the mic goes out. So we always start with our PHFA mission, and I'm not going to read word for word because, of course, you guys can read. But what we're saying here is we take pride in granting our borrowers home ownership by working hand in hand with the lender. Okay, so we have a host of lenders, and we make sure that we're working with them on a day in and day out basis so they understand our processes, so they can make that home buying process for our borrowers a breeze. So what is PHFA? We are the home loan investor. Okay, so we make our money through investment activities. Of course, anyone want to take a guess? With the lenders. Okay, so the lender pretty much does the dirty work, and then they'll sell the loan to PHFA, and then we'll service the loan for the life of the loan. We are created in 1972. Home ownership was created in 1982. And then our headquarters is here in Harrisburg, PA. So we're right down the block on Front Street. However, we do have 2 other satellite offices, one in Pittsburgh and one in Norristown. We have invested over $14.2 billion in home loans for potential Pennsylvania homeowners. And each year we have met our goal. So this year, I believe we purchased 4,209 loans on the year. Okay. We provided home loan funding to more than 175,900 homeowners. And like I said, those numbers are growing every day. So Justin went over the PHFA advantages pretty much. Anytime you guys need any marketing material, whether that's brochures, or if you need a PowerPoint, or if you need us to come out, do a lunch and learn, do one-on-one sessions, we do those for free, and we always travel to your location at any time. So just to touch on some of the advantages, we offer different loan programs, okay, both conventional and government financing. And I'll get into detail about those programs in just a little bit here. And then we have our Homebuyer Tax Credit, which Justin just previously discussed with the MCC. And that's an actual paper certificate allowing the borrower to claim an annual federal tax credit for the life of the loan. And it's also a dollar for dollar match towards their tax liability. Okay, so if you didn't know that, that is a great plus. It's always a benefit, like he said. It cannot hurt the borrower. Now, of course, they would have to be eligible for the program, but if they are eligible, it's always great that we suggest our lenders to match it with the borrower's first mortgage because they're saving money on the mortgage interest they pay each year. We have home purchase and refinance loan options. We're not going to get into too much of the refinance loan options, but if you do have questions about that, you can see me after, or you can ask the questions after the session, and we will discuss those. And then we have our assistance programs. One of our big assistance programs is our Keystone Advantage Assistance. Okay, so that is our down payment closing cost assistance program that helps the borrower with down payment and closing cost assistance. Now, anyone want to take a guess? What's the top 2 things that usually lenders and realtors look for when they have a borrower that comes into the office? Funds to go into the transaction, pre-qualification. Are you qualified to buy a home? And that's what PHFA is saying. We have funds for you to be able to be qualified for a home. Okay. Then we have competitive interest rates ranging from 3.95% up to, 4.625 with our bond programs, which is extremely competitive in the market. So that's another way, if you are a lender, to sell PHFA's product. Then we also offer free homebuyer education. That is extremely important when a borrower is purchasing a home. We want to make sure that they understand money management, financial literacy before actually purchasing a home. They need to know their needs, their wants in a home, what's more important to them. Okay, so that's just some of the things that we would like our borrowers to touch on before they go into purchasing. And we have over 80 lending partners throughout PA. Justin, myself, and Michelle, we all kind of split them up, and we handle them on the day-to-day basis. And then we're loan servicing. So the lender does the originating, underwriting, closing, and then we're doing the servicing. Any questions with the advantages? Okay, so I clicked through that really fast just so you can see the whole entire layout. Okay, so here's the layout of pretty much how it works with the borrower, the realtor, and then the lender. So the buyer, we have a buyer, right? They're interested in purchasing a home. They go for a realtor. Of course, they'll get their pre-qualification. Hopefully they have funds in the bank to purchase a home. And then they go to a lender. The lender takes them through that application process, okay? Once they take them through that application process, they would then lock the loan via our Pipeline Plus system, okay? That's how we lock our loans with our lenders. Once they lock the loan, they would then underwrite and process the loan. Okay, so PHFA doesn't do any underwriting. And what underwriting is you're pretty much gathering all requirements and standard mortgage docs to be submitted to PHFA to say that this loan is eligible. After they get an approval from PHFA, we're saying, hey, this loan looks good, you can close on the loan. They will close the loan, and then we would review it and we will purchase the loan. Okay, so after we purchase the loan, we service the loan for the life of the loan. Okay? They kind of just basically assign that loan right over to PHFA. So that's the process. So we're going to jump in and get into affordable mortgage products, our conventional financing options, and then our government options with our HFA preferred, sorry, can you see? And then our Keystone home loan program, and then our Keystone government. So one of our conventional options is the HFA preferred, and this is mortgage insurance provided by a Fannie Mae approved insurer. So basically what we're saying with this program is we have competitive interest rates with the HFA preferred, but we're saying compared to standard MI rates and home ready MI rates, our rates are better. And as you can see, we have our mortgage insurance coverage requirements listed below. So if you are familiar with any of the MI coverage requirements, and this is based off of FICO, this is based off of FICO and LTV. You can see we start at 18% coverage for LTVs greater than 95 and less than 97. Okay, so that is really low for MI, if any of you are familiar with the MI rates. So here's just some requirements and some guidelines with the HFA preferred program. So it's a purchase loan for new and existing homes. It's no first-time home buyer requirement. So this is big, meaning that they can own another residence at the time of closing. However, the PHFA home must be their primary residence, but they may own a log cabin, a beachfront, they may own another property where they're renting out. That is absolutely okay with us with this program. Now, the borrower must meet HFA income limits. So if you look in your folder, you should see Appendix B. And if you don't want to pull it out, the income limits are listed right here, but there is a Appendix B. I just wanted to notify you of that. So for Region 1, Bucks, Chester, Delaware, Montgomery, and Philadelphia, the income is $113,500, and that's for a one or more member household. Okay, so this is what the lender is going to determine if their borrower is eligible. So if they're over that $113,500 income limit threshold, they won't be eligible for this program. And then all other counties is $95,620. Okay, so that's for one or more members. And then when we take the income, it is gross income for all adult occupants intending to live in the home within the next 12 months. Okay, so if we know cousin Susie or Uncle Bob is coming to live, we need his income because he may receive Social Security, she may receive Social Security, dividends, bonus. We need all sources of income. So this is household income. It's up to 97% financing. So the borrower put 3 to 5% down. But all that we are requiring is that the borrower contributes the lesser of 1% or 1,000 of their own funds. And this is the only amount that needs to come from the borrower's own pocket. Okay? Own source of funds, cannot be a gift. Okay? Now the balance can come from a grant, can come from a approved Fannie Mae second, or it can come from our Advantage. But all we're requiring is that our borrower, we are requiring is that our borrower puts down the lesser of 1% or 1,000 from their own monies. The borrower must have a FICO of at least 620. Okay, so which is awesome. A lot of lending institutions that I've talked to, they don't even start until like a 660, 640, but we are willing to lend at a 620 as long as the borrower is approved and eligible for that loan. The max DTI is 50%. DTI is debt to income. Okay, so that's on the back end. They can't exceed that 50% DTI. And then the maximum combined loan to value, the CLT, will be 105%. So that means everything combined, the grant, the second lien, everything, it cannot exceed 105%. They can use our down payment and closing cost assistance as well. And I'll get into the advantage once we get to that slide. So eligible properties, we have 1-unit properties only and no duplexes, so no 2 units with this property. Now, we do have other programs that allow 2 units, just not with our conventional HFA. Condos, PUDs, manufactured housings are acceptable, and a property must be their primary residence, as I already stated. However, they can own another property. They just cannot live in it as their primary residence. Now, homebuyer education. Of course, we always promote homebuyer education just because, like I said, financial literacy is important, and monitoring your monies before purchasing a home is as well. So in this case, with this program, what we're saying is, regardless of the FICO score, homebuyer education is required. Okay? Now, the FICO score determines the style of homebuyer education. Okay, so below a 680, all borrowers must take an in-person class session. Okay, now if they have above a 680, they may take an online class session. And that must be a PHFA approved counseling agency. And we do have a list of our counseling agencies. I'm not sure if it's in your packet, but it is online. And we have, I think it's at the end of this PowerPoint, you'll have our web address and you can go online and you can see the counseling agencies. A big thing here with our HFA preferred is the pre-purchase counseling. So we have been running this. How long have we been doing this? A while, a couple months. I would say a couple months. If the borrower takes pre-purchase counseling, if before the agreement of sale, the sale of agreement is signed, agreement of sale, is signed, we'll give that borrower $300, okay, as a credit. A lot of people don't know this. This is big for the realtors to promote to their borrowers. Next, we have our Keystone Home Loan, and this is our mortgage revenue bond program. The max LTV is up to 97%. That has changed. Many of you, if you are a lender, you know that the LTV with the Keystone Home Loan was 80%. That went up with the conventional product now. And the max CLTV is 105%. And we are offering mortgage insurance with our PIF fund, our Pennsylvania Housing Insurance Fund now. Okay, because the reason we don't offer it with Essent, Radian, or any of those other mortgage companies is because the ratings aren't high enough. So we have our own funding with our MI, with the MI here. This program also has income and purchase price limits, and you'll see those on Appendix A. That's in your folders as well. We weren't able to put the whole Appendix A on the presentation, but you can take a look at Appendix A. And that has a first-time homebuyer requirement, okay? Do any of you know what the first-time homebuyer requirement is, what it means? You do. The 3 year, because you were, right. It's our 3-year rule. So that means the borrower cannot have owned a primary residence within the last 3 years, okay? So unlike the HFA product, this product does have a first-time homebuyer requirement. However, it is exempt in targeted counties if you're a veteran, or if the borrower intends to live in a census tract, okay? And you can see that on Appendix A. The max DTI is 50%. If you caught on a little bit, all our conventional products, the DTI is 50%. Excuse me. Borrowers must have a FICO score of at least 620 and 660 for LTVs above 80%. Okay? Reason we say 660 for above 80%, meaning you need mortgage insurance, okay? And you would have to use our PIF fund for that MI. Borrowers still must contribute the lesser of 1% or 1,000 of their own funds. And it can also be used with our down payment and closing cost assistance. Before, we did not allow that. So this is a big selling point. If you know any lenders, this is a huge program that they can market to their buyers. Any questions with the conventional options before I jump into the government options? Pretty good. All right. So with our government options, we have the Keystone Home Loan. Now that's the same exact program. It just has some glitches, some differences as far as DTI, but you're still going to use Appendix A for income, first-time home buyer requirement, purchase price. Okay. However, the DTI drops from 50% to 45% with government, and the FICO stays the same at 620. So here's just a snippet or a screenshot of the counties that are surrounding that we deal with on a day-to-day basis. As you can see, Philadelphia, Dauphin, Lancaster, Allegheny, and then there's the purchase price, the 1 or 2 member household, and a 3 or more member household, the incomes for those. Next, we have our Keystone government, known as our KGov. This is probably one of our most unproblematic programs because it doesn't have any specific PHFA limits. It doesn't have an income limit, it doesn't have a purchase price limit, and it doesn't have a first-time home buyer requirement. Okay, so what our lenders do, they just follow government entity guidelines with this program. A lot of people ask me, well, what's the point of using PHFA? It's like a regular FHA loan, right? The rates are competitive, but then they're still allowed to get that down payment closing cost assistance. Okay. Next, we're going to jump into assistance programs. This is our bread and butter, the Keystone Advantage Assistance. Okay. So this is not a grant. A lot of people ask me, hey, I heard about that grant, you're offering $6,000. It is not a grant, it is an actual loan that is a second lien on the property. Okay. However, it is a 0% interest rate over a 10-year term. Okay. The lender determines that. So let's just say the lender says to the borrower, hey, you need a full $6,000 for down payment closing cost assistance. They're looking at paying about $50 a month for down payment closing cost assistance. There is no prepayment penalty, but it is a second lien. It is not a grant. And they can receive 4% of the purchase price, capped at $6,000 for new homes and existing homes. And each borrower must have a minimum FICO of at least 660. Okay. Homebuyer education is required regardless of the FICO score. Of course, we want to promote homebuyer education, especially when it's free, when we're paying for it. Assistance funding, like I said previously, is determined by the lender. And then we have our access modification loans. This is for persons with disabilities. So the borrower doesn't have to be the person with the disability. As long as someone in the home has a disability, they can use this loan. It can be used with any PHFA home purchase program. It's conventional, FHA, or RD, and it's a $1,000 to $10,000 soft silent subordinate mortgage. It does not have to be paid back unless the borrower sells the home, transfers the mortgage, or no longer uses the home as their primary residence. Okay? If none of those 3 things happen, the loan does not have to be paid off immediately. Modifications must be completed within 90 days of closing. We also have our access down payment and closing cost assistance. And this can be used with the PHFA first, and it has to be used with the access home modification loan. It cannot be used by itself because you see the funds go up to $15,000. So some people, what they try to do is they'll try to use a first mortgage and just add on the access down payment closing cost assistance because it offers $15,000 instead of $6,000 with our advantage. However, the borrower has to make modifications to their home in order to use the access down payment and closing cost assistance. Just to give you some examples of some of the repairs we've done, we gated in a backyard for a mother. She had blind children, so we gated in her backyard. She lived by a highway. A guy, he was deaf, so we put lights in his home so he knew when someone's at his door, whenever they ring his doorbell. trying to think. Oh, we heightened countertops, fixed elevators to make the home more accessible. So those are just some examples of what we have done with the Access Mod loan. And then we're going to jump into repair program options, and Justin's going to take over. Any questions before Justin takes over with the repair options?
You mentioned with the access. Oh, sorry. You mentioned with the access loan that it has to be done. The work has to be done within 90 days after closing. What if somebody closed in November, needs a concrete ramp that can't be done till spring?
So what happens is if it exceeds that time, that's fine. You would fill out the lender will fill out a form and then submit it to our unit, and we pretty much always pass it to get by. There's never has been a issue, with that. So sometimes, like if you are fixing an elevator or if you're making renovations to the bathroom or anything like that, that's understandable. You would submit the form to PHFA. We would sign off on it. You would complete the work. And of course, you would have to send something back to us saying that the work has been completed.
For the soft or silent mortgage, is that any of that forgiven, or how long do they have to stay in the house before? Like, what if after 30 years they sold it? Do they still have to pay it back? Okay. So it just stays there.
Yeah, so she asked, with the soft silent, with the access, would they have to pay it back after the home was sold or after the loan was paid off? So that's one of the things. Once the loan's paid off, it would have to be paid back, yes. Any other questions? All righty. So I'll pay Justin to take over from here.
All right, let's try this again. Can you hear me? You sure, Mike?
Mine's is a little low.
Yeah, swap out. I'm the last presenter of the last day, so I got to make sure I'll wake you guys up. All right, whew, it's loud. So I'm going to go over repair options. Again, I'm Justin Eden from Pennsylvania Housing Finance Agency. Brooke introduced me prior. I'm a business development officer. I'm going to jump right into our repair program options. So to start, we have our purchase and improvement program. Now, with our repair program options, you may have heard of some of PHFA's options, or you may have heard of regular standard options such as a 203K, right? A Homestyle, which I'll talk about. You can use that outside of PHFA. So, oftentimes there may be some minor repairs that a home buyer is looking for when they go see the house. They have that vision. I don't have that vision, right? But some people say, hey, this is my perfect house. It just may need to upgrade to the bathroom, but I see it. So for that reason, we have these great repair options, and I'll tell you the difference between the two we offer. One, for quick repairs, not so much funding, and of course the Homestyle for more major repairs. So to start, we have our purchase and improvement program. With this program, a borrower can make repairs, and we give them up to $15,000. Now, is that a whole lot to make repairs? You can't make major repairs with $15,000, but again, you can make quick repairs. Windows, heating, air conditioning, bathroom upgrades, just upgrades. But again, it's quick. We can put it in one mortgage transaction, so you're not holding on to two loans with two different interest rates. So it's very streamlined. The maximum mortgage amount cannot exceed 97% of the total acquisition cost or as completed value. So what does that mean? Of course, they'll get the as completed value after the renovations are made, determine how much that would be. And with our other program, of course, all repairs, alterations, and improvements must be made within 90 days. And we talked about the eligible repairs. So again, just very brief and simple. There is more to this, and of course, the whole process with any renovation program. That whole process is the same. So the home buyer goes out. They find our own licensed contractor. The lender or PHFA doesn't do that stuff. That's really on the home buyer. And we provide them with documents, so they're informed on choosing a licensed contractor and all different type of things. There are some Fannie Mae forms. When we talk about the Homestyle, you have I'll introduce you in a second, my buddy Ray. Absolutely, you will. But yeah, so the borrower goes out, they find their own licensed contractor. They get the specifications, they provide it to the lender approves it. Next, we have our Homestyle renovation program. This is another really person improvement program that's specifically used with our HFA program. So it's just for conventional. When you're going to government financing, FHA, VA, RD, or RHS, some people call it, we have really 203Ks for that. But specifically for conventional, with our HFA program, we have this Homestyle. So with this, the renovation loan allows eligible borrowers to make renovations, repairs, or improvements to an existing home. And of course, much more funds here. The total cost of the renovations cannot exceed 75% of the as completed value. Eligible repairs we're looking at, and again, much more money, more repairs. One thing we say is, as far as the repairs, we say it has to be permanently affixed to the property and add value. So I say these things here, they're subject but not limited to, because you can make much more repairs than just your roof replacement, installation of air conditioning systems, renovations to the kitchen and bathroom, plumbing, and room additions. So again, many upgrades you can make to the home with this Homestyle program. We say unacceptable uses, right? Luxury items. Somebody told me, they was like, well, that's not true. I did a Homestyle, and we put a swimming pool in. Ray is from Fannie Mae. Look, I get thrown on the spot a lot. I do a lot of these. Ray's from Fannie Mae. He deals with a Homestyle. Right. So I'm going to refer this to you. Swimming pools, are these luxury items acceptable?
Well,
I'm going to give you the mic, if you don't mind. Don't worry, I'll make it quick.
unexpected. I didn't think I'd be speaking at this.
Right.
Can I get one of these placards? No, I was kidding. So it's just, as Justin said, Homestyle is a Fannie Mae program. Okay, it's offered across to all of our lenders. Now, renovation, you do have to be approved to offer it. And my understanding is PHFA is approved, and they offer it through their network of lenders, right? Now, I don't want to say anything because I'm not exactly sure what your rules are around how you, because see, what a lot of our products have is lenders do what they call overlays. In other words, let's say we do 1 to 4 units, but the lender only wants to do 1 unit, or they don't want to do manufactured housing. In other words, we have a guide product in our selling guide, but lenders that offer that product may decide to take pieces out. So I'm just not sure, because a couple of things, like, and I don't know if, but we allow homestyle renovation on new properties, not just existing ones. And I think these are okay under our new guidelines. We did update things, but PHFA may have their own overlays. They may say, we don't consider these eligible, which is fine. Perfect. Does that answer your question? Exactly what I was looking for. I dodged that ball, right?
No. So that's actually perfect. That's exactly what I was looking for, because again, I did a presentation and someone said, hey, well, outside of PHFA, we did a Homestyle and somebody put a swimming pool in. So just so you know, I'm not giving you conflicting information, it's a PHFA overlay. You said exactly what I need you to say. I'll pay you later. Just kidding. Somebody's like, write that down. But again, so these luxury items such as swimming pools, tennis courts, hot tubs, jacuzzis, saunas, how great it would be. I mean, I don't know who has room for a tennis court, but unacceptable for PHFA. So program eligibility, again, it's only with our HFA preferred program, going conventional. It's for purchase or refinance. And we talked about it has to meet purchase price income limits in Appendix B. You can do max financing with a max CLTV of 105, max DTI 50%. Prior to it was 40%, so we did raise that DTI a bit to, so more people can qualify for this program. The minimum FICO score is at least 620, and it cannot be combined with any of our other programs. Yes?
Are the rates the same?
I had a question, are the rates the same? So when you get into this renovate and repair program, and honestly, any type of renovation programs, when you're including it all into the one mortgage transaction, the rate will increase. So to answer your question, it is an increased rate when you're doing the Homestyle program. Good question. Any other questions? Good to go. So next we have Homebuyer Education. Question? Good. So Homebuyer Education, I'll just touch on this quick because we already talked about our first mortgage programs, our assistance programs. So Homebuyer Education, Brooke already talked about a bit. A few things I want to point out. One, it's free. We have a network of counseling agencies across the Commonwealth. Borrowers, potential home buyers, they go to these housing counseling agencies, even when they're not mortgage ready, I'm gonna tell you. They go to these counseling agencies. The counseling agencies do a great job of really preparing them to get mortgage ready. So even if they're not 6 months out, they'll do credit and budget counseling, pre-purchase counseling. They'll gather documents. They'll gather your pay stubs, your W-2s. They gather all these documents, and what that does is before they actually get to the lender, they really do a good job of determining if they're credit worthy, and determining risk. One other big thing about that is a lot of those documents that housing counseling agencies collect, which some people say, well, it's a bit excessive, but a lot of these documents these housing counseling agencies collect, by the time they go to the lender, they can provide these documents, or the lender can communicate with the housing counseling agency. They'll sign a release form, and they'll already provide these documents to the lender. So it really expedites the process, okay? They do a great job. So, again, it's all free for the borrower. We love free. And it's required for all FICO scores below 680. We also offer our online homebuyer education course. This isn't just for PHFA borrowers. Really, anybody can take this. You can log on. It's called our OHEC course, online homebuyer education course. And our last assistance program that we'll talk about is we have this employer-assisted housing program. So our goal with this EAH program, right? We are trying to partner with employers. We're going to employers, which you have a wide range. There is a list of employers in your packet on the left side. On the left side, I believe. So we try to market to employers. We have our partners market to employers, lenders and realtors. And we try to get them to offer a monetary stipend to their employees. Why? What's the benefit? The benefit to the employer is retention rates are better. It helps their turnover, right? How does it do that? We say you have to offer a monetary stipend of at least $500 to your borrower when they go to purchase a house, right? In turn, what the employer does is they write something up. They say, okay, I'll give you $3,000 when you go to buy a house. It has to be in a certain geographical location. Okay, so we're in Dauphin County. You have to purchase a house in Dauphin County. And also, you have to stay with the company for 2 years. So now you're getting the borrower to stay at the company, and it's community revitalization because they're buying in the community. So here we have, if an EAH employee is approved for a PHFA mortgage, through one of our participating lenders, the borrower receives substantial financial advantages. So in addition to the employer giving them money, what we do is we give them money also. So that advantage assistance Brooke talked about, that up to $6,000 they can get, we say, all right, instead of giving you the lesser of 4% up to $6,000, okay, the lesser of 4% up to $6,000, we'll just give you up to $8,000. So we wipe off that cap, basically. And again, that's a huge benefit because it's kind of tough to come by down payment and closing cost assistance nowadays. So again, we talked about what PHFA offers. Again, we go up to the $8,000. And you can also combine this with our tax credit. And really, when a home buyer goes to purchase a home, right, it's always good. You ever get a deal and feel like you won? So if a borrower, they go to purchase a home and you get all this assistance, you get a first mortgage, right, with a low interest rate. You get down payment and closing cost assistance. In addition, you get a mortgage credit certificate where you can potentially save up to $2,000 every year, right, for the life of the loan on your taxes. You're getting all of these things, and it just drives businesses word of mouth. It's a lot of great programs you can combine together. And I believe the last slide here is just some stats on this. So we have 50 employers. Again, they're on the left side of your packet. We purchased 241 loans. worth just about $30 million. And there's certain areas, geographical areas, where we really see the most productivity, such as Philadelphia, Lancaster, Cumberland, and Dauphin County. And then we did a quick statistic, the average borrower, as far as age, 30 years and under, and then we see a gap in 55 plus. Any questions?
The repayment on the 8,000 the same as on the 6, 0% for 10 years?
Correct. So the repayment option is the same. Yes.
On your grant program, closing cost assistance, is there an income limit on that, or is anyone eligible to get that?
For the
Well,
6,000?
6,000, but
So he asked, is there an income limit on the down payment and closing cost assistance for the 6,000? There is no income limit per se for the down payment and closing cost assistance. You'll just have to meet the first mortgage program guidelines. Yes.
I don't have a question, but I do have a comment as a former lender.
You want the mic?
I can.
They want to record the question. You'll get me in trouble here.
Okay. As a former lender, I did a lot of PHFAs, and by the time you take advantage of what's out there with the Advantage Loan and the employer assistance, whatever, and they have their minimum of $1,000 that's required, that's usually their deposit with their realtor, so it's covered completely. Yeah.
Great. Thank you so much. Testimonials. I love testimonials. Got to bring you to the next presentation.
And I have one thing that I wanted to say with the EAH. If you know any realtors, this is a big way. That's a big market for them. They don't know it because a lot of people don't know about the program in itself. So our employer housing initiative basically is us promoting home ownership within the employer. But if you think about it, the employer has the ability to promote the realtor and who they would like for their employees to use because they have to come up with a proposal. Right? So they could come up with a proposal, say you're able to use $5,000 for down payment closing cost assistance. And these are the realtors that you can work with in this area. That's a way for the realtor to network with the employer to get business through the employees. So if you do know any realtors, that is a way to market our EAH initiative. And the reason I just pointed that out is because a lot of people don't know about the EAH, and it does not cost the employer to become a part of this program. So if you do know realtors or employers that are looking to network and generate more business, you can promote this EAH, or you have my card and you can have them contact me at any time as well. Yes.
So to be clear, that employer-assisted housing is nothing, their employer is nothing more than a sponsor. They don't make any investment whatsoever
Correct.
in the down payment assistance.
Well, with they're given their monetary gift of at least $500, so that would be their contribution. Yes, it could be $500 all the way into $50,000, whatever they would decide, because that's up to their HR department to decide what they would like to offer their employees.
So it's a minimum of 500.
Exactly, it's a minimum of $500, and then they would create their proposal. Okay, so basically send that over to us, and we will put them into our system. So when they do have an employee that's looking to purchase the home, they will receive the funds from us with the $8,000 up to $8,000 for down payment closing cost assistance, in addition to what they're receiving from their employer.
And if they change employers during the term of the second mortgage, they don't have to pay it back.
That will be up to the employer to determine. So the employer,
That's their part.
Yes.
That's the 5 or whatever, the minimum 500.
correct.
Okay.
Yeah,
But not the 8,000.
not the eight. Well, they would have to still pay if
They
they're.
still have to pay it. But
Yes.
They don't have to pay it if they change employer.
No, they would still. It would just still be on their. Yep.
That makes sense. Thank you.
Yes.
I work with public family housing, and if I have a resident who is interested in finding a home, and they want to go through a program like this,
Yeah.
what would be their first step as point of contact? Who is familiar with the programs that could move them in the right direction?
So we have a list of our lending institutions that are all approved. So everyone has to be approved and trained personally by us prior to coming on. So if you go on our website, we have a largely, 90 lenders, I would say, they would contact the lender and get in touch with them about the program, or they could give me a call, Justin a call, or Michelle a call, and we can discuss. Now, we don't usually discuss a lot of things with the borrower head on, but if they do call in, we don't mind speaking with them. But it's always great to network or to connect with the lender first, so the lender can put them in the most appropriate program for them, because we don't know their income, we don't know their situation, we don't know their DTI. There's some things that we don't know that the lender would know, so they can fit them into a program that fits them.
And then they would be directed to a realtor?
No. The realtor side of things, I'm not sure if they would find their own realtor, if the lender directs them. That's pretty much up to them. But they can choose one of our lenders, and then they would work with the lender the whole entire time until it's time to pay their mortgage. Does that make sense?
Where does the homebuyer counseling fit in this process? Should she refer them to the homebuyer counselor first if they don't know what they're doing?
Yeah, she could. Actually, she could, and she should refer them to the home buying counseling first, because that's where we have a hiccup. They should be referred to home buying counseling first, because we have our approved counseling agencies as well. And
There's no charge for that.
no, and that's pre-purchase or pre-closing. So whether they decide the pre-purchase counseling or the pre-closing counseling, we fund that portion of the transaction.
And that those counseling agencies are on your website as well?
Yes, and they're all listed by county. So you can go into the different counties and see where your borrower is intending to purchase a home, and you can send them to that counseling agency. I always say in person's better. I think it's more intimate. You understand a little bit more. You're not putting the phone down or doing remote counseling and doing 50 other things. So I think in person is always the way to go, but we do have that option of online. They just want to make sure that their credit score is in good standing to do online counseling. But that is a great point there. Definitely refer them to the counseling agencies. Yes.
Speaking of that, what do you pay the lenders to originate some of these loans?
So they're able to retain 103% on our loans. Yep.
Can they charge another fee? Can they charge an origination?
So you're talking about the administrative fee. Okay, so they're not able to receive more than 103% on that. And they can't charge over $1,000 for administrative. So that's underwriting, processing, doc prep. Any other question? Great question. Any other questions? All right, awesome. So let's have some fun now, because I see a couple of you falling asleep. We can't have that. So we're going to play our Jeopardy game. All of you received a ticket, correct? Okay, so Michelle, our beautiful and wonderful business development officer, she's going to pick a number. She's going to read that number out, and whoever has that ticket is going to be able to do PHFA trivia. Okay? You're going to be able to play. Now, so that lets me know if you were paying attention or not. And then we have some giveaways. Okay? That I'll give away. So, you want a mic, Michelle? Okay.
706780.
All right. Choose your category and your amount.
Assistance program 100.
Assistance program 400. Did he say 4? Oh, 100. Okay, I'm sorry. I'm going for the big bucks. So PHFA's minimum FICO requirement for the Keystone Advantage Assistance Loan is?
640.
No, it is 660. Okay? Remember, 660. All right, another number, Michelle.
Next one. 706775.
Okay, Camille. 200, okay. The Pennsylvania Housing Insurance Fund, PIF, can only be used conventionally with what program? I'll give you a cheat sheet really quick. We have KGov, we have the Keystone Home Loan, and then we have the HFA Preferred. Out of those three, which one can be used? The PIF fund can be used, only be used. So it's the Keystone Home Loan. So remember the Keystone Home Loan at a 97% LTV. Remember we upped that LTV, and I said we can't use Gentworth MGIC because the MI ratings aren't high enough. So we have to use our PIF fund to fund that mortgage. That's okay. I know you were paying attention.
All right. 706, 784.
Yay. Okay, choose your category.
Assistance programs, I'm gonna follow the guy that's been winning like $1.6 million. He always chooses the largest one.
Okay, she's going for the big bucks, 400. She's going to get it right, watch. What is the maximum amount of assistance the Keystone Advantage Assistance Loan may provide?
6,000.
Correct. We do. That one wasn't.
1.6 million?
I think it goes on this side here.
Thank you very much.
You're welcome.
All right, next. The last three, 781. Rebecca.
I'll do general program guidelines.
Alrighty. Income and purchase price limits for the Keystone Home Loan are found in what appendix? Correct. You mind passing that back to her?
All right, next one. 787. Rebecca.
Assistance programs.
The interest rate and term for the Keystone Loan Advantage Assistance Loan is? Zero. So our advantage, 0% over a 10-year term. Remember, it allows you 4% or 6,000 or up to 6,000 as far as the funds they may receive.
All right. 788.
This side of the room is killing it, right?
Let's go PHFA first mortgage.
Okay. 2-unit properties are not permitted under this program.
HFA.
Correct. You're welcome.
Last four, 774. Oh, that's me. General program guidelines, 1,500.
Due to the same source of funding, the MCC may not be used in conjunction with this first mortgage program. We didn't go. So we're going to skip that one and you get to choose another one. I'll still give you.
General program guidelines for 400.
Okay. Face-to-face homebuyer education is required on all PHFA programs when the credit score is below. Yes.
I wrote that down. All right, 778.
It's going. Watch it be an HFA.
First mortgage for 300.
Under this first mortgage program, there are no specific PHFA income or purchase price limits.
What is the Keystone program?
Keystone what?
Home loan program?
No, it's the Keystone government. So remember when I was specifically talking about the KGov, I said there's no specific PHFA limits with that one. That's like a regular HFA. Okay, we have 3 more.
776. 776. All right, next number. 789.
300. True or false? The Keystone Advantage Assistance Loan cannot be used in conjunction with the MCC option. False. So the MCC can be paired with the Keystone Advantage Assistance, and I know we didn't talk too much about the MCC. We kind of just touched base on that briefly, but it can be used together in conjunction.
771.
Yay.
The general program guidelines.
Okay. PHFA's maximum total debt to income ratio for the government financing may not exceed.
97?
No, wait, we're going to ask it again. The maximum debt to income, so the DTI ratio for government financing may not exceed what percentage? 45. So the 50, remember, was conventional, 45 was government. You still get something for participating.
770.
Oh, yay! All right, the last one. This first mortgage program requires homebuyer education regardless of the FICO score.
All three.
No. So the HFA preferred, Keystone Home Loan, or KGov. And when I was talking about this specific program, I said regardless of the FICO, counseling is required. The FICO determines the style of counseling, so whether that's in person or online. So which one out of the HFA preferred, Keystone Home Loan, and the KGov program did I specifically say that?
You're talking about face-to-face counseling, or you're talking about just counseling?
Well, I just said counseling. So counseling's required.
For all the programs.
Yes, but for this one specific program, I said regardless of the FICO score, counseling's required across the board, because not all of our programs is counseling required. Now, if your FICO score is above a certain level, counseling may not be required. No, it's the HFA. Good guess, but that was it for the game, you guys. So that wraps up our session. Is there any questions you guys have for us after sitting here playing the game? Listen to us ramble on for a little bit. Is there anything that you want to ask us or touch base with before we wrap up here? All right, awesome. Well, I really want to thank you guys for attending, these ladies and gentlemen, for attending. We really appreciate you signing up and actually attending the session to touch up on your PHFA knowledge. All of our contact information is in the folders. Michelle doesn't have her cards yet, but you can contact the hotline and get a hold of her at this current time. But if you have any questions, please don't hesitate to contact us. And like we said, thank you for your time and consideration.
Thank you all.